Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Macro Monday. Let's take a look at some legacy charts. Global flows here for crypto products reaching a record 3.12 billion. We hit a record net inflows for the BTC ETFs, specifically in the US at 3.35 billion last week. We continue to see positive momentum. It's just a matter of who else is there to buy, right? There's an infinite amount of money. Everybody understands that. The question is, the people who have bought post-election, are they going to continue buying? Are we going to be able to push through 100K? Saylor bought 5 billion or whatever it was. Mara bought, Semler bought, all these people bought. Who's going to keep buying here is the question. But on the ETP side, most of the flows coming in through IBIT, most of the flows BTC through the US. I mean, that remains the story here. Some of the flows in Solana, Ripple, Ethereum, Litecoin. Funny that Litecoin saw more flows than Ethereum last week. Still very anti-ETH flows that I'm seeing. And that's despite these global products that do have staking already, for the most part. On the cumulative 30-day flows side, the upcoming question is going to be, can we maintain these highs, which I think we can. But I think it's going to be harder to break 100K without a little bit of consolidation first. But the flows look great. They look really, really good. And, you know, inevitably you have people saying, oh, well, the last time we had an all-time high in flows, it was the top or whatever. Okay, fine. You know, if you've got bear market PTSD, I can't really help you. But the flows are great. They're still positive. Are we going to see 3.35 billion in this week? Probably not, because it's a US holiday. But into December, into Q1, Q2, I'm still very positive on everything. Something I'm not quite positive on in the near term is MSTR. I think it's most likely MSTR is sideways and down in the near term. The cloud likes 337. That would be a tiny pullback in the grand scheme of things. The trade setup here for me, as I discussed last night, is just done. Kind of across the board with legacy. I don't see a lot of setups on the high caps, at least. On the low caps, I think there's plenty of things to trade from a setup perspective. But the setup here was the consolidation and breakout. So the next setup's going to be probably a consolidation or a mean reversion play. It doesn't make too much sense if we just shoot straight up from here before consolidating a little bit. And like I said, Saylor bought his 5.4 billion-ish, 55,000 BTC. Just absolutely wild. He's bought a ton of BTC in November. So the obvious question is, how quickly can he raise another convertible bond if he plans on doing so? Can he tap the ATM with momentum already grinding slightly lower? The NAV is 2.43 if that's correct. But because we didn't break 100K, I think people are getting a little squirrely here. Sub 100. Again, they're taking some off the table. They're saying, okay, Saylor bought, Mara bought, Semler bought, right? Everybody who said they were going to buy bought. And now what? Even Semler here, poor man's MSTR, very likely to consolidate. I like anything sub 50 at this point, but you know, everything's still bullish. It's just we've literally gone straight up, so it makes a little sense to cool off a little bit and make it another attempt at 100K, probably in December. Before we go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is the complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PBI, DBA, Kraken. On BTC, mainly on the daily. You know, the daily, like I said last night, looked and looks a little tired, right? We've got distance from the Kijun, which is pretty considerable. You have a bear div that we're paying off now, or to the bear div gods. We are bowing down to the pullback there. The psychological number, there's a yearly pivot rate at 99, I believe. We turn those on. Yeah, so we don't typically just immediately break pivots like that. This at 80K was certainly an exception. The resistance at 52, this is normally what we see. The resistance even at 62. It takes some time. We don't typically break it on the first attempt. So again, it might sound like I'm bearish, but I'm not worried about the cycle. I'm not worried about 2025. It's not about that. It's just about this level here where we've run into some resistance. So I don't like leverage up here. I don't like fresh longs up here. I don't like anything up here. until the market figures out where it wants to settle in. Looking at something like the 4-hour cloud maybe makes sense because we have got a pending bearish cross here. This is about time frame and time horizon, but if we're talking about today, this week, right now, all I can see is the likelihood of continued bearishness in this, potentially to 90. But again, there's nothing here saying, hey, trader, go long. Here's the hourly. We lost the hourly cloud for the first time since the beginning of November. So when momentum returns, I like potentially moving through and above the hourly cloud again, watching the 4-hour. It's just, we've done quite a bit of lifting here on price, and that's mostly from Sailor, right? So it makes sense to give some back. Alts have been kind of a mixed bag today. Some of them doing pretty well in the grand scheme of things. Sol not so much, Doge not so much, Ripple doing okay, ETH doing phenomenal considering it's ETH, and it's just kind of hanging in there at 54, 3,400, 3,500. Even TIA kind of hanging in there, doing okay. So in some ways this is isolated to BTC, in some ways it's not. It's a very strange market right now, but BTC is certainly one of the most concerning charts from an overbought perspective. I talked about Sol last night. Sol similarly, 200 would be the level. I just don't see the need to rush into any of this stuff here because, again, it's all super, super overbought and momentum has slowed pretty considerably. On the positioning for crypto from the COT perspective, this is from Jason at Crowder Market Report. Large speculators are still very short. And yes, this is ARB. And yes, it does not matter. It has not mattered. He will tell you that it did not matter leading up to this rally. It certainly doesn't matter now that this is ARB. Okay, that's not what this is about. We do want commercials in the red there to be long. That's what we see. But it is also a problem that the small speculators who are typically wrong, the large speculators typically wrong, you want both of them to be on the opposite side of this trade or not as long as they are. So it's certainly a little crowded based on small spec, but collectively this is kind of a mixed bag from a positioning perspective. On to legacy stuff. Not much this week. Fed minutes tomorrow, PCE Wednesday, and then of course Turkey Day Thursday. Next week we do have unemployment. That's going to be the big number. The question is going to be, is unemployment improving enough that we don't see a cut in December? And does the market get angry on that? Or if unemployment spikes and we do see a cut in December, does the market get angry on that? I just think it's very much a wait and see here. I'm not expecting a massive jump in unemployment, and that may anger Fed meeting expectations, which is still a decent distance away from next week. Looking at Truflation, it's settled in around 264, which is roughly in line with the current CPI, roughly in line with next month's print for CPI on the nowcast. If we look at the Cleveland Fed's number, 2.7. So we're about there. The issue is just the direction that we're headed and the potential increase in month-over-month numbers here and the rate of change from November in December when we get those numbers, right? So remember, Truflation is real time. All the other numbers are delayed by a month. But there's nothing screaming here. There's nothing, we're not at 3.6 or something, right, on Truflation. Really comes down to what are the odds for continued easing, and then what is the market digestion of what they think the Fed is going to do. We're not at 2%, but we're also not at 3%, right? We're not at 10%. We're just not quite to the Fed's target. In the UK, they're actually similar to this side of the pond, 2.6, slightly above their reported inflation. With Thanksgiving this week, the American Farm Bureau Federation has put out their annual survey results for cost of a Thanksgiving dinner for 10 people, which is a lot of people, but it has come down from 2022. You can see the post-pandemic inflation there. And this is more or less a representation of Main Street's understanding of inflation. Like, okay, fine, it's down to 2.6 on a year-over-year level, but on an aggregated level, it is still higher than 2020, regardless of how you want to measure this on a year-over-year basis, right? And so that is the pain that people are feeling, obviously, with prices being higher. They even say not adjusted for inflation here. And even regionally, South is actually the cheapest, West most expensive based on the items that they survey. Gas, though, is also down, continues to tick lower here, 3.6 for the prior week. and it is a multi-year low. We'll take a look at oil in a second, but oil still looks very bearish to me on the chart. AAA recently introduced an EV charging prices graph as well. Super interesting to see this broken out. You can look at the number of chargers per state, average cost per state, and it looks like it's cheapest in Kansas, Missouri, Nebraska, North Dakota, Texas, kind of the middle of the country here. I think the biggest issue with the EV side of things is our infrastructure wasn't built for EV charging. So if we start to ramp that up, we're going to have to retool our infrastructure to keep up with the demand there. But it's still interesting to see this data, and I'd love to see like a cost per mile comparison between EVs and gas combustion engines. Looking at GDP, we're still fine. It's like 2.7, something like that, 2.6 on the estimate. Definitely not in recession territory. On the liquidity side, reverse repos basically flat at around 200 billion. And if you remember, this is a representation of additional liquidity that was added into the ecosystem from 2023 onward. So we've used up this slush fund for liquidity, and this is largely how BTC is where it is on top of the fundamental news. This is largely how the S&P is where it is on top of the AI miracle, right? Despite having the fundamental reasons for assets to be where they are, there still needs to be money behind that, money flows behind that. And that's where a lot of this went towards. On the yield front, in this dark green line, we started to uninvert. Now we're trying to reinvert a little bit, but yields still stubbornly kind of flat here. There was some movement on the Scott Bessent news. He wants to implement this 333 paradigm, increasing GDP, increasing barrels of oil, and decreasing the deficit. I think markets overall have enjoyed that idea and enjoyed Trump's nomination of Treasury Secretary. Looking at global liquidity again here, in the green, we do have a headwind here for sure, relative to alts and BTC and even US liquidity in the white. We are going against the grain here. And the question is, if this is all election related or regulatory related, when does that honeymoon wear off? And how much higher can we really reasonably expect in the rest of the year, let's say? If we went from being unsure of what the election outcome was to pricing that in to getting priced in what is going to be the next catalyst to help push us through 100K. Now that could just be, again, going sideways, consolidating for a little while. We don't have to pull back, but I think pushing past 100K is going to be tough without another catalyst. Looking at the bond complex, again, because of that Bessent nomination, everything having a little bit of a party on the bond side, TLT up, SHI, AG, IEF. Trend-wise, I still don't see a trade here for me on any of this stuff. Maybe into 2025, maybe not. It's hard to really know what anything means for anything until it starts to move in that direction. There's nominations and expectations of what's going to happen, but then when reality sets in and, Doge can't cut the amount of government spending it wants to, then maybe bonds get angry again, right? But there's certainly no slam dunk trade that I can see across the bond complex here. Dollar pulled back a lot as well, and this makes sense with yields lower. And from a crypto side, from a global liquidity side, we do not want DXY going above 108. Something to watch into next week based on that unemployment number. Are we still in the higher for longer path is the question. And do we stop easing, right? If we do, that may push DXY higher. And that's one reason the markets may not be so happy. Gold also down like 3.25%, much like MSTR and even BTC on lower time frames. I don't see a great trade setup here. This consolidation looks like a bearish consolidation, whether it's a head and shoulders or a diamond top. Even if this breaks up, if you were to tell me right now, right here, what do I want to do? It's sell gold. It's get out of gold positioning. You're expecting the downside. So if you're willing to eat that, that's fine. It doesn't have to go to 2,400. But this does not say, based on trend, expect bullish continuation here. At a minimum, this is likely chop and does lean bearish based on how this looks. Some people have said this is the peace expectation being priced in with Trump taking office. Oil, like I said, looks bearish on tech. It has looked bearish for a long time. If you zoom in on this, you get a little head and shoulders again. And does this go to 50? I don't know. Does it go to 50 because of drill baby drill? Does it go to 50 because of global recession fears? I don't know, but none of this looks bullish. That's all I know. On the weekly cloud, it's simple. It's been bearish since 2022, and it continues to try and break down. I think in general, this is very hard to trade directly, but the bottom line here is bearish trend metrics. That hasn't changed. And if the Trump administration wants to increase supply with demand where it is, I can't imagine that is super, super bullish for oil prices. Good for risk, good for assets, right? Not so good for oil, the commodity. On SPY, again, like what is the trade here? You know, like yes, it's bullish on trend. The cloud is potentially signaling an upcoming bearish TK cross here within the next couple of weeks. It just doesn't look like an entry for anything. It looks fine. It looks healthy. It's just, I don't see breakup potential. Continuation looks weak. I'm sure there's a bear div on this. It just looks a little tired. That's all. The Q is very much the same. Haven't hit a new all-time high yet. And I don't see a great setup here. Doesn't mean it has to go anywhere. I just don't see a great setup here. What I'd be looking for would be a cloud reset, a TK crisscross, some sort of pattern, anything. It's just kind of been sideways up chop since September. IWM close to an all-time high breakout, might have hit the breakout, or it might have hit the all-time high today. Kind of like alts and the rotation games, you know, it's certainly possible that as people are rotating out of tech and out of the S&P or whatever into IWM, that despite this looking bullish and being bullish, the higher market cap stuff just sort of drags everything down with it. But this looks great on trend. It looks great on breakout potential, all-time high potential. I think IWM, much like, you know, ETH needs BTC to not break down to 80K, right? ETH can do well if BTC just ranges from 90 to 100. The same thing with IWM and the small caps. I think they can do well so long as we don't have a massive pullback on the S&P, which doesn't look to be the case currently. So the IWM is probably free and clear. Unlike crypto positioning on the COT data, equity positioning here is quite bearish because you have commercials on the short side, you have large and small spec on the long side. Again, this is who you don't want to be on the side of typically. You want things to look like this. You want commercials to be very long or just on the side of commercials in general. So this certainly represents a positioning headwind for equities because people are very long here. So who's going to be the buyer, right? And I think we're seeing and feeling that on the indices. With the individual names, NVIDIA, it just looks kind of tired, you know? It doesn't have that pop, doesn't have that pep in its step. It's had a couple pretty decently large down days here. Not quite a head and shoulders, but it doesn't scream bullish continuation. It's not knocking on some horizontal resistance level. It just looks a little tired here. Now, that doesn't mean I have to pull back to sub 100. It just means, for me, I don't see a trade or a setup there. Microsoft, on the other hand, looks bearish and continues to look bearish. Similar to oil, you know, you can ignore the trend metrics, that's fine. But you can't be surprised if this breaks down. It's on the proof of the bulls here for Microsoft to pull this up above 430 so that I can say, all right, you know, it's not as bearish anymore. But this keeps drawing head and shoulders fractals. It keeps trying to break down from this diamond top, and it just doesn't look bullish. It's on trend, you know, and that's all there really is to it. Apple, kind of the same. It did have this ascending triangle potential. It's still kind of there. But the cloud's saying, you know, it's kind of time to figure it out or just jump out of this thing. Very choppy and not obviously bullish. You know, this isn't like May where we're seeing a fresh bullish cloud breakout. This is after months of chop, the cloud just finally sort of throwing in the towel and saying, all right, you know, there's no momentum. Neutral makes sense. Watch and see how this plays out over the next couple of weeks. I mentioned Schwab last night, but in the small cap land, there's plenty of stuff that looks like this, right? Squares, another one. This is IVZ, this is Invesco. There's lots and lots of stuff that has gone nowhere for years and is finally starting to pull up. So to me, this is a trade that looks legitimate versus just sort of sitting in the S&P and hoping that things continue to move your direction. I can at least measure a breakout trade here and it looks fine on the cloud, et cetera, et cetera. So this would be something I would be looking for rather than just sitting in NVIDIA or sitting in Microsoft. On the crypto side, WGMI, the mining ETF, could potentially have a cup and handle here. Now, it's hit the old inverted head and shoulders target. Miners haven't traded particularly well as a group. So it's just very tough for me to sit in this right now. If I'm expecting some weakness in BTC, I can't expect miners to magically break out of a cup and handle, So it depends on your viewpoint on BTC. But I don't expect a lot of strength here out of miners. This is IREN, sort of in the middle of its channel, looks kind of neutral-ish on the cloud. I don't see a great setup here based on technicals anyway. It doesn't mean this can't break out and do well. It's just I don't see much of anything here. On the daily, CleanSpark kind of the same. It looks like it wants to break out. It's trying to break out. But on technicals here, I don't see anything just yet. You'd want cloud bullish. You'd want price to hold above the cloud there. Ultimately, above 20, you're probably in the free and clear. But for the moment, this just looks like more chop ahead. And then WULF has this head and shoulders risk below the cloud on low time frames. It just doesn't look like a great risk reward setup to the long side to me, especially if you're kind of bearish BTC. And then there's Mara, which is all sorts of types of mess. They've got issues with efficiency. They're buying BTC now instead of mining it. I don't know. I don't know if they know what they're doing at this point. But on technicals, you have a bearish TK cross, you have a bullish cloud, you have a head and shoulders from 2023 that never really broke out or went anywhere. It looks okay. Again, though, I don't know what exactly the trade is here. Maybe a breakout at 28 or something. But if it was me, I'd rather just trade straight BTC or trade some leveraged products or trade MSTR or just anything else that has generally done slightly better than Mara. So all in all, I do think there are some low cap gems on the indices on the high side, high end market cap side. Things just look a little tired. Doesn't mean we need to go full doom or bear. Just less likely to continue. That's all I got for this one. Like, dislike, comment, share, subscribe. Happy trading.